How's it, folks? I hope you all had a great weekend and you have rested enough. I know that's a very difficult thing to do though. So yeah, we're going to talk a bit about what I expect the market to do in the coming week, and we'll begin with the dollar index, which is our benchmark. We must not forget that. So regarding dollar, we have seen April turning very bearish, right? The month of April has traded to the downside. Huge weakness came into the dollar since the beginning of the month. Now, when you look at April's price action, this bearish candle, when you look at that bearish candle, in terms of price action, in terms of relative strength, it is telling us the market is pushing to the downside. But now, when we look at the fundamentals, when we look at the bond market, when we look at the COT numbers that came out on Friday, it becomes very interesting to take note of the bullish order block that provided support during the rally from January, February, and March. It's very paramount that you understand that these PD areas that you mark, especially on a higher time frame, they are going to be in effect for a while, for a long time. You can see here we're going back to the bullish order block that was formed March 2018. March 2018, and then we saw this rally in dollar all the way to 98. So now we've got March tantalizingly close to the opening price of our bullish order block. Now, which makes the 50% mean threshold of the OP very crucial. So this is the 50%. Let me just make that small. That's too big. It's way too big for my liking. So the dotted line represents our 50% mean threshold of this bullish order block. Now, why is that important? Because as far as relative strength, as far as momentum is concerned right now, we could see price trading back to 90.17 on the dollar. We could see either April or May trade back to the 50% mean threshold. Now, if that happens, then we've got a short-term bearish momentum on dollar. We'll be looking for further weakness. But now, for those guys that came to the class on Saturday, we saw the numbers for the COT report. We saw the number that came out on dollar. They added more long positions, right? They added more long positions and they were taking profit on their short exposure. That is significant in regards to the upcoming week. And if you look at the calendar, the upcoming week has got very strong fundamentals for the dollar. There's very strong fundamentals. It's also the last week of the month, and I do expect to see a bit of retracement in this bearish drop that we saw on during the month of April. But now you need to consider both sides of the market, because as it is, dollar is weak, but that's by no means to say we cannot expect bullish moves. Now, the COT report is definitely supporting that dollar is bound to find support in the coming week, and from that support then we should be looking for long entries. we should be looking for dollar to erase some of the losses that happened in the past couple of weeks. Now, where are we gonna hunt for those longs? Now, this is where your PD array and your institutional order flow becomes very important. Now, we already have our bullish order block highlighted. We've got the 50% mean threshold of the month, of the monthly bullish candle. Now, what lies below March's low, right? Below March's low, we've got sell stops. Now, you can also see March's low is the opening price of the bullish order block. So March's low is coming in at 630. So that's March low, right? Below that, we've got sell stops. We've got sell stops below here. Now, what are the chances that these sell stops are going to be triggered? Very likely. Market will look to take out these sell stops and probably rally to the upside. Now, which other price action that you need to take note in here? Look at February high. Look at the high for February, which the market broke to the upside. You see the high of February that's coming in at 9159. The high of February that's coming in at 9159. That is crucial because that's where the market structure break to the upside happened, right? See here, this is where we broke to the upside and we saw a very strong dollar in March. But April erased all the gains from March and broke through below that same price action. Now, with this marked, we need to go to a lower time frame. In this case, it's a weekly time frame. Now, can you see February high? This is February's high. Let me just take note of that. So this is February high. Now, we've seen March, beginning of March, price was in a weekly bearish order block, meaning we would have been hunting for short trades. Now, sell stops below March's low, price would definitely trade below. But by the time it trades below March's low, where is price trading into? Into our monthly bullish order block. Now that's crucial. Into our monthly bullish order block. And up here, as price was moving to the downside during the month of April, which is the current month we are in, as price was moving to the downside, it has been creating liquidity voids and fair value gaps. You can clearly see here we've got a liquidity void, fair value gap. The last week also we've got a liquidity void, and if you look up here, beginning of March, of April, sorry, we've got another fair value gap. You must take note, guys. This price action is very important for you to highlight, because you are going to know where price is likely going to head to, where you can look at the chart and be like, no, price is going to go there. Price is going to need to rally to that side to collect this liquidity. You see, you need to understand that part. So now, inside our monthly bullish order block, which is the gray shaded area, right, we've got sell stops below March's low. Now, this was the origin, the beginning of this strong move to the upside, which is what? Displacement. Remember, that's displacement. Only institutions can move price that much. So this is our last down candle, which is inside the monthly bullish order block. See here, meaning this is where we expect price to find support. Now the numbers that came from COT report, they added more long positions, the commercials, and they've taken profit from their short exposure. So now your target now is to hunt for discount arrays. Discount arrays where you're going to trade long from. Now with FOMC coming in the week, with the Bank of Japan coming in the week, there's bound to be a huge move in dollar. You can also see that from the commitment of traders report. Open interest on dollar moved drastically. Open interest on dollar was reduced massively from 39,000 to 36,000. That's a huge move of almost 2,300 from last week's open interest. That's a 6% move in open interest. Now, regarding open interest, what did we say regarding open interest? We mentioned that when open interest declines, right? When open interest declines, what does this signify in regards to the commercial traders, right? When open interest declines, it is an indication that commercial traders are reducing their net short positions. Now, it can't be a coincidence, guys. It's a bare minimum requirement that you are able to link these numbers together. Now, open interest declined massively from last week's number to the one we got on Friday. And that signifies the commercials are reducing their net short positions on dollar. So dollar is bound to find support. It cannot just keep dropping. You must understand that part. It can't keep dropping to the downside. Now, with Powell coming in on Wednesday, with the Bank of Japan probably on Thursday, I have to check the calendar. You can check the calendar, guys, to clarify the dates. But that is crucial for dollar. It is crucial for dollar. And now we need to hunt for discount arrays where we are going to trade long from. Now, when you look in the daily time frame now, you can see we've got a vacuum here. Now, this area is a possibility that during FOMC, this area, let me highlight it. All right, during FOMC, we could see price dip into 90.20, right? During FOMC, and that will be now the ideal target to hunt for your long trades. But now, even though it's a bit of a stretch, we definitely need weakness on Monday and Tuesday for dollar to reach 90.20. So that might not happen. But the moment we dip into the monthly bullish order block, right? The moment price dips in here, you are looking for long opportunities on dollar. In this range, you are looking for long entries. You are looking for dollar to find support. You're looking for dollar to trade into a discount array. Now, which other discount array is there? I've highlighted the vacuum. Now, we also have, you see, the law of March, right? The law of March and this high. The law of March and the high of that up candle. Let me just mark it nicely, guys. Let me mark it properly. So that's coming in at 285. You can see where the sell stops are. Where the sell stops are, there is a fair value gap, but this fair value gap now is to the downside. So I'm talking about this range here. talking about this range. You see that range there? It's a range in price where price hasn't traded back to. Dollar is bound to find support in there. Mark these charts, mark your charts the same way that I've marked these guys, and you're gonna see upcoming week you see that dollar will find support in this range. And when that happens, now that's where we load long positions on dollar, yen, USD CAD, USD CHF, and we'll be shorting euro, USD, GBP USD, Aussie dollar, New Zealand dollar. So already by now you should have a clear picture on how you're going to approach the coming week. Now if you are to take if you're going to go long in this monthly bullish order block, where is your target? These bearish order blocks, that will be your target. Now let me just go to lower time frame and zoom out a bit, so you can clearly see we had dollar clearing the stops here. Stops cleared. Now this analysis can change by the click of a button, but remember we always stick to our analysis. Now above these two equal highs there's buy stops, which will definitely be a target if you are to go long, and already we've traded below this low here, clearing the stops. Now we wait for Monday to open, and we wait for Monday's price action. So if price dips into the gray shaded area during FOMC, that's your trigger, that's your cue to be hunting for long entries on dollar index. Now let's see how this is going to affect euro USD. Now regarding euro USD, I'm just gonna go to the analysis that I have already on this chart here. Just a minute. Alright, regarding euro USD, these fib levels are now absolute. They've become absolute. They're not valid anymore because we had a break in market structure with price retracing 100%. Now if we are anticipating dollar to find support on that monthly bullish order block, expect euro USD to also find resistance in this monthly bearish order block, right? Expect euro USD to find resistance in this monthly bearish OB, right? So you can see March is high. We've got what? Above March is high, there's a liquidity pool of buy stops, right? Above March we've got a liquidity pool of buy stops. You see, the whole idea is that you shouldn't go into the market blindfolded. You should know exactly what you are looking for. So above March we've got buy stops located there, and we also have this bullish order block here. Now if we go to a weekly time frame, you can see as price was moving, right, this fair value gap here, price almost traded back into it, but not by March. You see, not by March. So now we need to identify where price is heading to. Look where the 50% mean threshold of the month is. That is where this kind of found resistance. So we're expecting, I'll be anticipating euro to trade to the upside into our monthly bearish order block and find resistance from a premium array. Then we'll be selling euro USD. Now dollar has to confirm this type of setup. The more we get dollar dipping into that monthly bullish order block, the more emphasis is there on shorting euro USD. Now on daily time frame euro USD, you can see we've got we've got a fair value gap here from March's high where the buy stops are located, right? There's a fair value gap. Where is the fair value gap? Some might ask. This is our fair value gap, and we've got a liquidity void here which price hasn't traded back into. Now expect price to clear the buy stops before we start hunting for shorts. Now you can see what happened here. This is what I'll be expecting to pan out during FOMC. Price dipping into a monthly bearish order block and finding resistance and drop. Now resistance, where is the resistance going to be? In these premium areas. You can see we've got a fair value gap which was closed here, first attempt, but still when price comes back, that fair value gap will be valid. So Euro USD, expect price to trade into the monthly bearish order block, and then from there you should be hunting for premium arrays to sell the market to. Let me just go to H4 quickly and see. I need to zoom out a bit. Yeah, these buy stops, they are truly exposed. They are well and truly exposed. Price will definitely clear those before we start hunting for short trades. So yeah, that's pretty much about it for today, guys. I'm just gonna cover dollar and Euro USD because from there everyone now understands how to apply the concept on the other pairs. There's also GBP USD. When you look at pound dollar, you can see we had a nice drop last week from the rejection block, daily rejection block. I was anticipating these buy stops to be cleared, but that didn't happen. Once I saw this rejection, I was already shorting the market. So that was a nice trade on pound USD. So in the coming week also, I'll be hunting for short trades on this pair, but firstly I need dollar to confirm. You can see here we've got a liquidity void which price will look to trade to before it finds resistance, and we've got our daily bearish order block. I'm just gonna extend this. Let me extend this to say the 25th, right there. You see the gray shaded area. Now let me just increase it again. 25th, let's say the 28th, right? Much better. Now I'm also going to increase the rejection block to the 28th. Much better. So you can see, guys, we marked this institutional order flow long time ago, I think beginning of February or something like that, and it's still in use. So I'll be expecting price when it reaches this gray shaded area, which is our daily bearish order block. That's where I'm targeting my short entries on pound dollar. Then we've got Aud Cad. Remember, Aud Cad, institutional pairing in dollar based strength. So I still have a short position running on Aud Cad. Remember, this is for class purposes. So already this trade is risk free because the stop loss is below my entry. I'm still anticipating Aud Cad, to find resistance in this daily bearish order block, and it should drop all the way to this weekly bullish order block. So shorts are ideal on Aud Cad. Then USD/JPY will be hunting for long trades on that asset, but I'll leave you guys to mark the institutional order flow, your PDRA matrix there, so that you understand what you are going to be looking out for. So yeah, I think that's pretty much about it for today. And for those that didn't come into class, make sure you capture the COT numbers. There's very interesting number on the euro futures market. Shorts were increased by about 12,000 on euro USD. The commercials increased their short positions by 12,000. That's almost like 2. And I think let's see. Yeah, the short positions on euro futures were increased by, so that's, I'm just trying to do the numbers. They were increased from 471 to 494, so that's 3 by almost 23,000 positions. That is crucial. The commercials increased their short exposure on euro USD by 23,000 positions. Guys, understand this part. Open interest increased from 648,000 to 661,000. That's an increase of 12,000 on open interest. We are bound to see an explosive move on euro USD in the coming week. That's where I'm gonna leave this class on. I wish you guys good luck and happy trading. And if you haven't subscribed to the channel, guys, subscribe. And if you're in the mentorship group, you're getting this video Sunday evening or latest Monday morning, because remember, we wait for Monday's session to progress so that we see how price trades on Monday. But if you're not in the mentorship group now, you're only getting this video probably Wednesday evening or even Thursday morning. Depends on what time I would have remembered to make it public. This is because the fact that it is a premium content, and first and foremost, mentorship guys come first. So if you have enjoyed the mentorship, send us a message and we'll take it from there. So with that said, guys, I wish you good luck and happy trading. Thank you.